What is up, everyone? How are we doing today? It is March 11th, 2026, Wednesday. We had CPI today. Got absolutely cooked on that. Yeah, that's pretty much it. I'm going to go over today's quick trade recap. Now, I found two setups today. One was really good, but I didn't end up taking it just because my daily bias was the other way. And the second setup I actually took, but it was a break-even trade. So yeah, let's get right into it. But yeah, other than that, it's been a good day. We ended up blowing 300K Alpha Future Zero counts today on CPI. Literally everyone I know got cooked on that. Rough day, but it's all right. Now, talking about 9:30 open, we had two setups today. One was a long position and one was a short position. And the first long position I didn't end up taking just because I was looking for shorts. But the second position we actually got was a short position, and that ended up breaking even. So I'm going to go ahead and show you guys those two trades. And yeah, let's go ahead and start. So hopping onto the charts, we're on the 4-hour time frame right now. And as you can see right under us, we had this 4-hour unmitigated gap, and 4-hour unmitigated gaps are a great target. All right, so hopping onto the hourly time frame, we have these equal highs right here. And as we know, this is a great magnet for price. This is a great liquidity draw. And right here, we can see we have equal lows here and relative equal lows here. This is a great sell side liquidity, as well as the swing lows and the unmitigated 4-hour gap that I was talking about. So as you can see, this is the 7-hour candle. Now we do have this hourly bearish fair value gap, which price actually ends up tapping into. So this is a good key level for us to look after. So this is the chart right before market opens. So coming into the day, my higher time frame bias was bullish. And this is because right here at 8:30, we had CPI, and this is the big data high. And we know this is a great target for price. We know that price is going to come up eventually and sweep this high. Now, even above that, we ended up having Asia highs right here, which is another great draw, as well as these stacked highs. And if you remember, under us, we did have this unmitigated 4-hour gap. Now, depending on what market wants to do at open, I had two scenarios in my mind. Number one, we either just start pushing up, we take out data highs, we take out Asia highs, and we even take out this buy side liquidity, and then eventually creating an inverse all the way down to the unmitigated 4-hour gap that we had below. Now, the second scenario is that price just dumps at market open, right? We take out all these stack lows, we take out the swing low over here, and we just tap into our 4-hour unmitigated gap. Now, if we hop back to the 4-hour time frame, and since this 4-hour gap has not been tapped into, I would have loved to see price tap back in and push us through all the way to the buy side liquidity up top. All right, so we just fast forward into market open. This is 9:29, and at 9:30 market opens, and boom, we immediately sweep out this data high from the CPI at 8:30 this morning. So we can see that market wants to push price higher. Now, what do we want to do? We want to target this higher liquidity. And what do we have right here? We have our Asia highs as well as this major swing high. So it's only been a few minutes since market open, and what ends up happening? We end up going up, and market pumps down, right? So price started pumping, and then we started going lower, right? So if we end up switching to the 5-minute time frame, we can see that price didn't only tap into this first fair value gap, but it also, and more importantly, tapped the second one. And tapping into the second fair value gap gives us such good conviction that price wants to go higher, because something I look for a lot in my trades is that whenever there's a move that creates multiple fair value gaps, look, we have one right here, one right here, one right here, and one right here. We have 4 fair value gaps in a row. I would much rather see price tap into the second or even third fair value gap, as it puts us in a discount and gives us such a better risk to reward for continuations. We can even look at the equilibrium of the range from the swing low to the swing high, and we can see we traded into this discount, right? And if I'm looking for continuation longs, I'm much rather going to take a trade in a discounted position where I can get a higher RR than if we were only to sweep out this first fair value gap and push up from here. You're always going to have a better RR if you're trading at a discount compared to a premium, right? Okay, going back to where market actually is. So we're respecting this 5-minute gap right here. And now that that's been tapped into, what am I looking for? An inversion. And as you can see, actually at this candle, what do we have right here? We have a 1-minute IFEG. And right in this position, this is where I made a mistake. I was still convinced that price wanted to tap into this 4-hour gap and then push up. And earlier on in the video, when I was analyzing the pre-market, I said that we were going to be trading into this hourly bearish fair value gap. And what I did not realize at the time is that this hourly candle closed above. I missed this. I just wasn't looking at the hourly time frame. I just don't know why that slipped my mind. And I thought we were in bearish structure since we were respecting this, and that we were going to pull down into the 4-hour and then eventually take continuations. And just because I missed that one little thing, I didn't enter. Any other day of the week, I would have taken this 10 out of 10 times. I just completely overlooked that fact. And I didn't realize we clossed above that higher time frame gap. So I just didn't take this position. However, I still was monitoring it, but I still had my long position tool open during the trade. And right here, I had my stop loss at the bottom of this candle wick, and I had my take profits at the Asia highs or the 15-minute stacked equal highs. Now I had my break even right at this bearish gap right here. And after that closure, as time passed on, we just ended up pushing and we ripped through TP. And yeah, this was just a really nice 3RR trade. We had our major external draw on liquidity, which was the Asia session highs. We were trading in a discount and tapped back into that range. And overall, this was just a banger trade idea. Unfortunately, we didn't get in, but we still had the idea in our head and it played out. So I can't complain about that. And a few minutes later at 10:20, we started dumping down. And at this point, I really had high conviction that price was going to lower. Under us, we had so many stack lows in that unmitigated 4-hour gap. So I was really confident that price was going to keep shooting down. And as price was shooting down, we ended up retracing up into this gap. And what ended up happening is we created a 1-minute inversion fair value gap. And it didn't displace on this first candle, but on the second one it did. And that's where I entered the trade. I wanted more room for this trade to play out because I had high conviction it was going to go south. So usually I have my break evens at the body of the candle, but in this one I had it at the wick. And since we only had a 1-minute inversion here and we really weren't bouncing on any bearish or value gap or any other key levels that would give us more technical proof that we wanted to shoot down, I just moved my take profit to the stack lows under us for a nice 2RR trade. And due to the lack of displacement of these candles, I did have a break even at these stacked lows right here. So now as time plays out, we can see that we tapped our break even. So I moved my stop loss to our entry and boom, on the next candle, we just got stopped out. So honestly, I wasn't too mad just because we broke even, and that's a W in my book. However, price just kept ripping up. And later on in the session, price actually does end up taking out these lows. As you can see right here, we just didn't have the correct entry to take advantage of those shorts, but price did end up ripping down, sweeping out those stack lows that I was mentioning before. But yeah, that's it for the video. I hope you guys enjoyed the breakdown. That first entry, that first long was a beautiful play. I just overlooked the hourly time frame in the moment, but that's a dumb mistake. That was on my end. And honestly, I'm not really mad at it at all. I'm very happy just because I saw how the trade played out. I had my long position open and the trade played out exactly how I thought it would be. So that's a W in my books. And on the second trade, the short position, we just entered at the wrong time, but we ended up breaking even. And then like 20 minutes later or something, price ended up dumping and taking those stack lows. So yeah, the right concept, just like wrong entry, but that's okay. We didn't lose anything on the day except for CPI. I can't believe he blew his accounts, but you know, it happens. I actually back tested all the other CPIs for the previous months and it was like an 80% win rate or something crazy. I full ported NFP too, just for the fun of it. I know the NFP win rate isn't as high as CPI, but those accounts got blown too. Like, what was it, Friday, I think? And then today we lost 3 more accounts, but it's all good. It's part of the game, part of the grind. And yeah, I hope you like this video. If you want to see more content like this, please like, comment, subscribe, share. Anything you do will help tremendously. And yeah, I'll see you guys in the next video. Peace.